in general, we're seeing very good results being posted by brewers across the African continent. It's double-digit growth for most of them. Some is fairly exceptional, 40%, for instance, a company like Lerato. And I think it speaks to the fact that we've got this rising middle class, this consumerism in Africa. Is this a sustained growth or just something temporal?
I think to a large extent it's actually a catch-up phase. You've actually seen where there has been quite a substantial period of underinvestment. You had quite volatile growth over the last sort of 2-3 decades, and only the 20 zeros, that's actually the last decade, that has resulted in consistent high economic growth, which has actually translated to increase in disposable incomes. And beer, one of those luxury items, definitely has benefited a lot.
I mean, with changing economic conditions, people are wondering whether the brewers can sustain this. We're seeing rising inflation in some countries. They started to introduce really steep alcohol taxes, and just the question of whether or not this kind of growth is sustainable.
Look, in the short term, there's bound to be volatility. I think we can all acknowledge that. Definitely when inflation increases at 20%, you're going to see squeeze on disposable incomes. People will cut down on the cell phone usage. They will cut down on how many beers they drink. They might actually buy lower priced beers. And I think, so there will be some kind of substitution. But I think from my personal experience, people drink when they're happy and they drink when they're stressed out. So I think as a sector, I think has tremendous potential, specifically the brands. You actually find that brewers, compared to other consumer companies, can actually maintain strong margins simply because if you're used to drinking Heineken, you might sell down, but you're not likely to stop drinking completely. With wheat or other products, more staple products, you see that you don't have pricing power as a producer.
The more established international players are seeing phenomenal growth in new frontiers like Angola, like Zambia, like Uganda, even southern Sudan. For you, where are the most exciting opportunities?
Look, I think we have to distinguish between two things. One, investment from a stock exchange perspective, where you have listed companies in the sector. And secondly is investment by the multinationals or their subsidiaries into those markets. So if you look at the multinationals, they're going to be investing wherever the opportunities are. For example, SABMiller, they have about 15 or 16 countries where they operate on the continent, and they allocate capital based where the prospects are the best, where the risk is lowest, where the prospects of return are the highest. In terms of investors on a stock exchange, it's a bit different situation. You see appetite for Nigerian breweries being sustained. We've seen Guinness Nigeria has come off a bit. It's less liquid, I guess, so it's taking a bit of punishment when investors decide that sort of Greek debt crisis has some perverse relationship with what's happening in the beer market in Nigeria. And EABL, I guess, over the last few months has been under pressure simply because of all the negative factors that you mentioned earlier about the drought, about what's happening with interest rates in the region.
Let's talk about some of these big giants. Heineken earlier this year acquired 5 breweries in Nigeria, so we're seeing consolidation and dominance in that market. EABL and the selling of a stake in Tanzanian breweries and the share buyback creates a situation where they may just retain this dominant position in Kenya. SABMiller, as you said, operating in over 16 countries, having invested over $200 million in the last year alone in terms of its African growth prospects. Is this really competition, or is it in some sort of an oligopoly? Is it the dominance of the big players where it creates 4 large brewing houses in Africa and nothing else?
Look, it's definitely good to be big, especially in these markets where you have the similar brands. So, for example, a Castle can be sold in South Africa, can be sold in Botswana, can be sold in Zimbabwe and other markets. So definitely benefits from introducing global brands to the markets as well. We've actually seen Heineken benefits a lot from the Heineken brand, which is a global brand. So more affluent Africans drink Heineken because they see the prestige and sort of the positioning of the brand appeals to to them. So I think being independent, I think you're actually in a losing game, to tell you the truth. The purchase by Heineken of Sona Breweries in Nigeria, that was one of the last assets in Nigeria that you could actually bid for. My understanding is there was an auction process, and Heineken wanted those assets the most, partly to prevent SABMiller from competing strongly in the market.
And very briefly, for some of the smaller players, you know, they may be dominant in countries like Rwanda, Bralirwa. They've got to take on these big giants. The question is, how do they do it? How do they raise the capital? There's talk of cutting dividends to shareholders. Shareholders won't be pleased. Maybe a corporate bond issuance if the market allows. But right now we're seeing illiquidity in the markets in general. Acquiring debt. How do you go about raising capital to really entrench yourself competitively?
Okay, Bralirwa is part of Heineken, so I guess they have a big balance sheet behind them. But definitely it has become much more difficult in terms of raising finance for expansion. You want to invest in good times and bad times. So you don't want to create a situation where you're running out of stock. So the companies are definitely investing more. They're buying sort of capacity. Borrowing is definitely a problematic issue, as you mentioned, in terms of interest rates. But brewers generally are very cash generative businesses, and cutting dividend, you might not like it, but having a lower dividend for a year or two, it's definitely much better if it positions the company's prospects for the future.